Hey everybody, welcome back to the channel. I'm Doug the Retirement Guy with all your monthly ETFs, and I'm giving you a special report today. As a close of business on 8/12/2026, the big announcement came. Goldman Sachs is buying out NEOS. Yes, this is the shocker news. You probably just heard it and instantly we're on to it. Goldman Sachs is buying out the entire NEOS operation. We're going to tell you, is this a good deal, bad deal with the information that we have? So grab your favorite mug, fill it with your favorite beverage, get ready for some shocking news coming out right now. Disclosure, this information is, the presentation is for educational purposes only, not for financial, legal, or tax advice. Past performances do not guarantee future results, and I am not a professional trader. So what actually happened? Goldman Sachs agreed to acquire NEOS Investments. It's the management behind several popular option ETFs, especially with retirees. Now, the deal's worked out right now on paper of 2.25 billion maximum deal value. That means NEOS has a $30 billion in active income ETF assets. Now, the funds are expected to close in the first quarter of 2027, pending all the approvals. So this is just an instant stuff right off the bat, but I want to make sure everybody knows this immediately. This is not a fund liquidation, okay? So don't panic. Don't get excited. Don't worry about your money yet. This is not a fund liquidation. It's a manager's acquisition. Okay? They are basically taking over the operations of NEOS, not liquidating the funds. So why Goldman would want NEOS? Well, the retirement market is asking for income. And you see it on my channel all the time that we talk about all the different ETF funds, how to build the three bucket retirement paycheck system. Well, they want tax awareness and outcome oriented ETF designs. They love what NEOS has done. This is like number one and number two merging together. NEOS built a recognizable option income brand very quickly. We see it on the channel all the time. NEOS has been up in one of the number one or number two funds always in our listings. Goldman wants a larger active ETF platform. Income ETFs are no longer a niche corner of the market. They are the retirement business. Retirement income now is huge business, and Goldman Sachs wants more of it. So what changes for investors right now? According to NEOS, no immediate action is required. ETFs are expected to keep trading under the existing tickers, SPYI, QQQI, IWMI, BTCI, the Bitcoin High Income ETF. Now, the reports that I've read already, that is the cow. That is the piece that Goldman Sachs wants to buy. They want to build out their Bitcoin package. And BTCI is the high income ETF that they feel will fit perfectly under the Goldman Sachs management side of the business. So right off the bat here, guys, I'm telling you, these SPYI, QQQI, they have GPIX and GPIQ already. They have those covered, but they don't have the Bitcoin one. So remember, your shares are not going to disappear. Goldman is buying the business behind the funds. Okay, so think of it, I'm going to put it in baseball terms or even football terms, however you want to put it. What they're buying, Goldman Sachs is buying the New York Yankees. Players are all having their jobs, the managers having jobs. All they're doing is they're buying the team. They're buying the team. And then they're going to put their own I'll call it their own managers, or they'll keep the NEOS managers because they've done a great job. They want the business behind the funds, plus, of course, all the funds. So how the acquisition is going to work, they think of it as changing an ownership of the ETF manager. As I said, I like to put it in the baseball, keep it down to earth that people can understand. You're going to change the ETF manager. So maybe it's the baseball manager. I like to put it as the baseball owner of the team. They're replacing them. It's not a direct trade in your ETF shares. So Goldman Sachs is going to acquire NEOS Investments. They are the manager and the advisor to the NEOS ETF Trust, which is shareholder votes, and then it's the funds themselves, QQQI, SPYI, IWMI. The key point here is the proxy vote is going to matter. That the people who own the funds, who have invested their money into the NEOS package, is going to have a voice, and they're going to have a vote on the proxy about this entire acquisition. Now, of course, this all has to be approved through all the regulations, but really right up front, they know what they got. They know what they're working with already. They don't just go out and do this stuff out of the whim. So why is this could be a good thing? Well, Goldman brings a scale that can help a fast-growing ETF shop mature without losing its core investment process. Bigger distributions through advisories and institutions, operational risk, compliance, and trading resources, leadership continuity is expected after closing, and more products developed potential over time. So it's one of the old things I say, it's scale plus the team continuously build the big case, build the bull in the room, become the powerhouse that Goldman Sachs once was and will be again. Now, what could go wrong? A strong acquirer does not automatically make every fund better. Investors still need to monitor the details. Questions: the fee changes. Is Goldman Sachs going to continue with the fees that NEOS is using, or are they going to change it to something lower, or are they going to increase it? The expense ratios and the acquiring funds costs, where's those costs going to be put into? Strategy drift. Option processes or distribution policies could change. Now, I don't want to scare anybody with this. I want to put this information out so you have it. But the culture shift. So what happens to the culture of NEOS is that the entrepreneurial team that they have inside, then when you mix it with a new company like Goldman Sachs putting this together, will they blend together? Will they operate together? These are things we don't know, but that's where the planning comes into. And then the overlap. What happens with Goldman Sachs already having GPIX, GPIQ, which are phenomenal funds, great strategies. I talk about them all the time. Will they keep SPYI? Will they merge them with GPIX? We don't know. Okay, again, not Panicville, but what are they going to do with their overlaps? How are they going to handle it? I hope they would keep them both the same, leave it alone, because you have funds that work so well together that I just think it's the best thing going is putting those two together, blending them in the perfect mix. So you got to watch your prospectus. Okay, it's not just the headlines. You got to watch the information coming through. So if you own these funds, you're going to get information on it fairly soon. Now, the shareholder proxy vote. NEOS says ETF shareholders will receive a proxy material along with voting instructions. So you can already tell this was not just something that just happened, at 4 o'clock tonight. What you're happening is this was been the plan. Today was the release date. So do not ignore the packages that come from your brokerage house. Okay, you're going to get this on each fund that you have. You want to look for the new advisory agreement. You need a board of trustee nominees, the fee and service details, and any strategy disclosures. They're going to give all of the information to you as a shareholder, and you're going to be able to vote in part on the transition. Okay, this is very, very critical. I know you get these. If you're anything like me, you get these in the mail all the time. You're like, oh, this is great, and you throw it in the trash. You need to take these, and unfortunately, I'm going to say sit down, put your bifocals on, put your glasses on, read it because it's probably going to be small print. Read what they tell you. Look for these high marks like the fees, strategy changes. Okay? The board of trustee nominees, do we even know who they are? Well, we'll probably do some research. I'll probably do some research for you as well, but we got to make sure you're reading your information. Investor scorecard, good or bad? Well, a current assessment that I have personally that I've been able to get, I look at it as being positive. I'm going to be I'm a positive person right off the bat. I'm not really a negative person, but I do think this is going to be a positive, but not a blank check. The final answer is going to depend on what changes after the closing. So this is why I give it a 7.5 out of 10. It leans to the good side. I think these are perfect marriages. And even as I've talked about you with my 3 bucket system and how to work with the income package where QQQI and GPIQ are great things together and adding in maybe the tap alpha on top of that. But it's always been Goldman Sachs and NEOS have always been together. Now that they're together as a whole company, I'm waiting to see how this goes. So why didn't I give it a 10 out of 10 if I'm positive and I like the idea? It's because I need to see the proxy details. I need confirmation on the fees and the strategy. I need the performance after the integration. I need to see, it's kind of like buying an ETF when I tell you you got to wait 6 months to 12 months. Well, I got to tell you, I got to wait and see before I can tell you, hey guys, good, bad, or ugly. Do we need to change strategies or do something about it? I need to know what the proxy details are. I need to know the fees. Who's picking up the tab? I don't want to pay for it. I'm hoping they're figuring they're going to add this in and they'll collect it from the more volume that they're going to have. So I got to have these answers before I can go ahead any higher. But 7.5, I think this is going to be a positive thing for our retirement funds. 5 things I would watch. 1, the management team. Who's in charge? Who's going where? The NEOS has done a great job of what they do. Whether they're going to keep them and let them be part of the team, or is it going 100% Goldman Sachs? Expense ratios and costs. Like I said, I do repeat a lot, but I really mean this one. How are the expense ratios going to go? Are you going to increase your expense fees or are you going to keep them the same? We already know Goldman Sachs is raising their fees in April. Okay? We already know that. They've reported that. Going from 0.29% to 0.35%. Is they doing that because they're buying this or are they doing it because they can? The option strategy and distribution policies. I want to know what that's going on. I would hate to see them make a change of, QQQI going to weekly or SPYI going to weekly and GPIQ stays where it's at. I want to know what your distributions are going to be. Are you going to make any changes to it? I want to know your tax treatment. You guys are all questioning that. I want to know tax treatments now. Is ROC the profile? Are you going to switch instead of the NEOS tax program? Are you going to switch it to an ROC 100%? I want to know how these things are going to play into effect because that's going to affect my income, affect my process. And then I want to watch the NAV stability and total return numbers as I do on every fund. But now I'm starting over. I want to see how this is going to change. These are the 5 things I'm going to be watching on these funds on a regular basis. And if you watch the channel normally, and if you're not, hit that spot, hit that button. Get it to where we're always contacting you. You'll see our new videos. Don't buy the yield, buy the investment. So I want to know the whole package, what's going on with this. Would I panic and sell NEOS ETFs now? This is a big one I wanted to make sure I got out to everybody, and that is absolutely not. No. This is not based on an announcement alone. The thesis of change only if the fund changes. Okay? I'm telling you right now, this is just a corporate ownership is not the thesis of a fund. Fund results are what we're looking for. Okay? Selling triggers. If there's material fee increases, if there's a strategy change, or the NAV or total return starts to change, well, that's common with any fund. Of course, we'll make changes. But the hold monitor, if it's the same team, same strategy, results remain strong, why would we even worry about who owns the New York Yankees? Who owns the Atlanta Braves? We don't care who owns it if you are doing the same team, the same strategy, and the same results. Okay? So don't panic. Big thing here, do not panic. So you're not selling anything tomorrow. You're not doing anything. This is a whole thing of saying, hey guys, we're changing, we're merging, and we're hoping that the merge will become a bigger, better, stronger piece. So the bottom line for retirees, the guys, you guys I care about the most, this deal likely validates the category, but investors still need discipline. Income ETFs have become the mainstream of Wall Street products. Thank you very much. Thank you to all of you. Okay? We are the mainstream now. The retirees like myself, been retired now for 10 years, and I've been heavily into the ETFs in the past 5. Goldman appears to want NEOS for what they've already built. I don't expect a lot of changes, because they have a successful company. They're just putting it underneath their umbrella. The real test is going to come after closing and the proxy approval. So it's going to be good news with some homework. I really hate to tell you guys this. It's going to be some good news, but we got to do some homework. We got to do some reading. We got to do some evaluations. I'm here to help everything I can. I'll be putting out any videos I possibly can. The more information I get, the better we'll have to work with you. So the question for the viewers is Goldman Sachs buying NEOS good or bad for investments? Leave a comment down below. Are you shocked like I was, or did you expect it coming? Leave a comment down below. I'd love to hear what your opinions are, because income matters, NAV matters, total return keeps the retirement plan alive. And I want to thank you for watching, and leave your comments down below, and we'll give you as much information as we can when we can. Thanks for watching.